Here's November 13th. Let's look at the S&P. Here's SPY depository receipts, which mimics the S&P 500. This is a monthly chart, and you can see this really long-term bullish uptrend started way back in 2003. So we're still racing to the upside here. We have a decent pullback in the current month, but it hasn't even reached down to that trend line yet. So there could even be some downside before that trend line would break. So long-term bullish. That doesn't help us intraday though, or for the near term. I've just gone down to a daily chart now, and we can zoom in on this pullback as we rally towards that long-term supporting blue trend line. The question is whether that long-term blue trend line is going to win out, or this recent short-term downtrend, the red line, which started on October 11th. So if we break below this key support level at 144.5 or so, 144, even if we break that support level, then we're probably going to test this supporting long-term trend line, the blue one, and if that breaks, then this market gets really bearish. So we don't have that situation yet. What we have is a pullback towards that trend line in a long-term uptrend. For the long-term uptrend to continue, we're going to need to rally. And on the upside right now, for an attempted rally, we have some key resistance levels based on the current swing low of yesterday, which could change. But based on that swing low, we have resistance right here around 149. Call it 149, and the next one at 152. Two key resistance levels, which could give us some intraday shorting opportunities if this near-term downtrend is sustained. If it pushes up through those, the next resistance level should be up at around the swing high of October 11th, which was around 157.5. So it might be another short opportunity up there. But in between those resistance levels are some intraday long opportunities. Just be aware of those resistance levels for profit taking or potential shorting if that downtrend line is sustained, the downsloping red trend line. Of course, above the swing high of October 11th, we're into bullish territory again for all-out buying of dips intraday. Until then, we've got the resistance levels. If you want to try the long side, as we have a bit of a bounce today off of support, watch out for the resistance levels for profit taking and potential shorting if that downsloping trend line is to be sustained. So in summary, below this upsloping blue trend line, aggressively shorting for bearish territory. Above the swing high of October 11th, it's bullish territory for buying dips. In between there, we've got to watch these two resistance levels as it tries to rally, and we've got to watch the support level down here around 144 or so. By the way, the support levels have been on my chart for quite a long time. If you look at my prior update on my website, you'll see they've been there, and they were actually, we could calculate them all the way back since mid-October or so. So that's how Fibonacci works, gives you some warning in advance of potential support and resistance levels. That's the update, but one more thing. I have a seminar this weekend online on my website, and I only have a seat available that's limited to 10 people, so I can answer all of your questions effectively. Hang on here, and I'll take you to a website where you can research that and perhaps register. And if you do, I look forward to meeting you online and on the phone in a teleconference this weekend.